they're not dark lines anymore between these markets, which is really exciting from a distribution perspective. So we sit here and say, you can create case studies that would suggest, are the markets big enough? Are they robust enough? So far, what we see is tremendous size of order books across all the platforms. And yes, there is dispersion. There are things to be concerned about. The prior panel around private credit and some of the challenges there, 100%, there is dispersion. But when you think about this AI investment, it is generational, but it's also being very well received by capital formation, both in the US and globally.
When you think about the development of the technology and the power to support it, it feels like ultimately this is a bet on maybe a handful, a dozen hyperscalers, companies that are developing these AI models. How are you managing concentration risk in that respect? It's
interesting you say that, because sitting where I sit on Capital Committee, the number of companies that are coming through our system that I would admit I haven't heard of. It's not just super concentrated. Yes, there's concentration, but again, there's a lot of innovation going on around power, energy, distribution. The derivatives of all this investment is filtering through the economy. And so yes, it's concentrated. Yes, we're concerned about risk, and we mitigate our risk pretty carefully at Goldman Sachs. I'm sure other banks do as well. But it's spreading into the economy in a way that I think is very constructive and will be absorbed by many more companies and a lot more innovation. I mean, I'm telling you, the number of companies that we are now trying to develop a relationship with just in the US is extraordinary. It is not just the big five.
Could you give us a sense of what sort of your pipeline is like, and how much of that is kind of accounted for by AI and AI-related deals?
So a couple stats. The leveraged finance forward calendar is one pipeline that we look at, right? It's down to mid-30s from 70s, so that's lower. Obviously, I'll call it the AI-related pipeline around structured IG is up significantly. And you can see that in high-yield issuance this year, 20% of high-yield issuance is AI-related. That compares to 12% in IG. So again, last year, there was very little being done in high yield in around the AI ecosystem, and now it's accelerating. So, we see robust M&A pipelines. We see robust, I'll call it AI-driven investment pipelines. I mentioned the sponsor backlog is still light in terms of sponsor-to-sponsor transaction. I think the prior panel talked about that. What is driving M&A and driving sponsor activity is take privates. It's up almost 37% year over year, as well as, I'll call it, portfolio restructuring of large corporates. We did a transaction this week for a large company that split off a division that was non-core, LBO, B2B, nice company. That loan priced at SOFR plus 250, almost at par, B2B. So that just, again, shows you, yeah, there are big pipelines, and there's a lot coming, but there's a lot of capital.